Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby, to the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you own it. And it is a wonderful day indeed. We're seeing a hell of a bounce in the markets right now. We're going to get into all that. Plus, we have Adobe earnings today. I'm super pumped for that. And I got a lot of insight on what I think Adobe might do. And then obviously we'll see what it will do later. But before we do any of that, let me hit everybody up with the starting five. We got Jonathan Schreiber, Oliver Thorpe, Mike Hudson, Jeff Nick, Michael Hanna. I love it when they're all in the order. You see, like when somebody shows up and then they just start continuing to like put a bunch of comments in there and I got to sift through and actually count the starting five. It is kind of a pain in the ass. So I appreciate that. I appreciate the succession there. But nevertheless, guys, if you missed the starting five, it may be because either you're late or you didn't hit that notification bell. So make sure you hit that notification bell, subscribe, and hit that thumbs up for the stream. What's up, everybody? Right now, the stock market, like I said, is ripping face. Like I said it would on March 3rd. I said March was going to be a face ripper of a month. So far, so good. Over the last several trading days, it's been nothing but green, and the S&P right now is up a 1.25% over $4,500. The Dow is up almost 1%. Nasdaq's up 2%. Tech is just ripping. It's amazing. And even crude oil, WTI crude, still staying well above $100 a barrel. It's only down around 0.75%, sitting at 111. That is your numbers for the indexes. Just an unbelievable day, guys. And let's take a look at this real quick. So we have the SPY here. Very crucial or key points to see here. We're seeing a close above the 200 and the 50-day moving average. We are almost starting to get a little overheated. I would love to see some chilling out. Not saying that I want to see it kind of correct all the way back down. I just want to see it chill out a little bit. We might see some of that as we, maybe hear from some of the Fed meeting minutes. We'll see tomorrow. But so far, so good. And even the Qs. Look, this is also a key point for the Qs as well. So this is the NASDAQ 100. We're seeing this well over 350. God, feels like just yesterday we were talking about this all the way down to 318 and how it had bottomed. And now it's sitting over the 50-day moving average, making its way to 367, which is that 200-day. But again, starting to get a little bit hot. I'm not saying that it can't keep going. I would just love to see it maybe chill out, consolidate a little bit before we see the next move up. But this is exactly what we expected to see happen after the Fed started to raise rates. And that happened last week. Seems like ever since then, we've seen nothing but green. How are you guys doing, by the way? Are you all seeing the relief back? And let me know your thoughts. Is this nothing but clear skies for the rest of the month? Are we going to see a huge month here for the rest of March? I'm loving it. I'm loving it. I see a lot of people talking about Tesla. Tesla had a great day today. One of the big reasons is because the German plant started to hand over vehicles. The first Model Y was delivered from Berlin, and that is doing extremely well, getting ready to close pretty damn near the high of the day. So really exciting stuff for Tesla holders. This is still doing monstrously well. And even some of the other larger cap tech. I mean, we don't talk about Apple a whole lot, and we don't talk about it enough. I know it seems like a lot of people do, but we're seeing this get back to a $3 trillion market cap. I mean, it is on its way back above the 50-day moving average. That's going to close above that today. And I think the momentum is certainly there. It just seems like yesterday, again, with this one, where we were talking about it down at 150. So this is looking really darn good, especially for those of you who are in the chaos crew who may have paid attention to the watch list. CrowdStrike on the watch list for the last month, really down in the 150 area. We've talked about CrowdStrike a lot and cybersecurity in general, and that is absolutely ripping face. So I think this is one that probably continues to go. We saw Okta actually report that they had a security breach, and more news coming out from the White House that Russia plans to maybe carry out a cybersecurity attack on the U.S. They're basically alerting the American people that that's a possibility. So what happens to cybersecurity? It continues to go up from here. I mean, we're looking at some really good numbers across the board. Palo Alto hit all-time highs today. Even Zscaler made some pretty decent moves. That's up 5.5%. So if you guys missed this move on cybersecurity, it's probably because you are not part of the Chaos Crew. So if you want to be a part of the Chaos Crew, get your daily watch list that I put out every single day of the week. 5 stocks with a technical breakdown, fundamental analysis every single morning before the market opens. If you guys want access to that, make sure that you're hitting that join button next to subscribe, or go to ownthechaos.com. We'd love to have you guys as a part of the crew. Unbelievable day, guys. I see a lot of you really excited for the day. Oh, yeah. Snookeroo says crazy price action on Nvidia. Yeah, I didn't catch the investor meeting, but Nvidia had crazy moves today as well. They had an investor meeting and actually turned back around and is actually in the red. So pretty wild moves on that too. We look at the 5-minute chart and it has been all over the place. I'm not quite sure what to make of that, only because I haven't really gotten a chance to see what's going on with their investor meeting today. However, I still think that the semis are worth hanging on to as well. I like Nvidia. It's just taking a little bit of a breather. I mean, it's had a hell of a bounce. I mean, can you really complain about this coming from these bottoms? Bottom support here around 210. I mean, it just looks absolutely fantastic. It can have a 0.5% down day today. That's fine. No big deal there, Snookeroo. All right. Adobe, is Adobe a buy? Says, so yeah, we have Adobe earnings today. Let's take a look at the chart right now on Adobe. That's having a hell of a day too. I think it's up. Last I checked was up around 3%. Yeah, 2.92% right here at the close. Let's go to the 5-minute chart so we can get some real-time action on this. Looking pretty darn good there too. So what do you guys think? Where are we at with Adobe? Adobe has earnings per share at around $3.34. Estimated revenue is going to be around $4.24 billion. And the thing of it is about Adobe, right? It's obviously had a really tough go, along with the rest of tech. But Adobe isn't going anywhere. And I actually like this trade. I'm not saying that it's a sure buy before earnings, because I think it's a little bit touch and go still. Things are still very volatile, and there's a lot of sensitivity out there, especially if they come in and miss earnings. But I would be very surprised if they came in and gave us any kind of poor outlook, if they gave us any kind of slowing of growth, because the digital space for Adobe, especially in digital marketing, is exploding. And let me just read something from you for you guys from Barron's. Barron's was talking about just online shopping in general, and Adobe estimated 2021 U.S. online sales at $885 billion, up 9% from $813 billion in 2020, which in turn soared 41% from $575 billion in 2019. Adobe also found that prices rose for 21 consecutive months as inflation grew more severe, and just the growth here is extraordinary. They quoted as saying the pandemic spurred a breakout for online grocery sales, which I know, just hear me out here. In 2020, Adobe says online grocery shopping grew 103% to 73.7 billion. Growth has since moderated, though the total reached 79.7 billion last year and could top 85 billion this year. That's just on groceries, but in online shopping alone, Adobe is projecting $1 trillion in sales this year. So while we are seeing a technical slowdown in growth, the growth is still there, and it's still extraordinary. $1 trillion is insane for online sales. That is a wild number. A couple other things that I kind of wanted to note was just that some people look at Adobe as, Photoshop, Premiere Pro, right? A lot of that stuff. So I think, hold on, we got to put somebody in timeout. Stop spamming the chat, y'all. But I think that Adobe is just going to do extremely well here. As always, we know there's always risk in owning stocks before earnings, and it's always kind of a crapshoot. You might as well play roulette if you're really trying to gamble. You could always do that. But I still think that it's kind of like Nike yesterday, right? I talked about Nike's earnings and I said, I'm a little bit hesitant to be like, oh, yeah, this is a great buy before earnings because of the potential slowdown that we're seeing in some of growth in general. It's not going to be like we saw in 20 and 21. However, the growth is still there, and Nike was able to navigate a lot. The stock is up considerably, and it took a little bit of a breather. Interestingly enough, it touched the 50-day moving average. It touched that 140 resistance that we talked about within the Chaos Crew, and yesterday, and as acting as a resistance. I think this still moves up. Yesterday, the conference call was incredible. I think we see something similar from Adobe today. Again, because of marketing in general, and we're seeing just how much online sales matter, the digital space isn't going anywhere, and neither is Adobe. So I'm actually excited for Adobe's earnings today. Kind of pumped for it. Let me know what you guys think about that. Okay. Ivan Broski, yeah, CrowdStrike has been killing it. Yes, Chaos Crew favorite. Damn it, Don. Just tell him to call him back. Just tell him to call him back. But what's up, Don, from the Don Fran Show? Listen, I know a lot of you guys have been asking about Don coming on to the stream, and we're trying to make it work out. We just have scheduling conflicting schedules, scheduling conflictions. That's still the same thing, right? But anyways, we'll get Don on at some point. Okay. That's right. That's right. Jeff just says, just ignore the call for sure. Absolutely. How do you guys feel about Adobe? Does anybody in the chat, anybody watching actually own Adobe or are considering buying Adobe maybe after earnings? The reason why I say after earnings is because look at the upside here. I will say that I don't see it getting back to $700 anytime soon. I think the upside is maybe halfway between where it's at right now and the highs. Reason why I say that, we look at some of the statistics here. Price to sales is at 14. 14 is price to sales. Forward PE is actually relatively decent compared to the rest of tech. It's 33 times next year's earnings, which is in line with your Microsofts and Apple's, that sort of. And it's actually a little bit higher than Alphabet, but it's pretty much in line with some of the other big tech names as far as that's concerned. The price of sales is a little bit on the higher side, even with the drawdown here. But we'll see. We'll see what happens. I really like this, though. I like it down here, and I think that even after earnings, you still have an opportunity to get into this. Juicy Trades, thanks for the intro, love. Says nice entry, in my opinion. Yeah, I appreciate it. Shout out to Dim Sweets for the sweet beats. Go follow him on Instagram. Dim Sweets. At Dim Sweets. He makes all my beats for me nowadays, and he crushes it. I mean, he makes all kinds of sick. He's got thousands of them. It makes it so hard to go through and pick which ones I actually like. But we'll go up in the lab again, not in the not too distant future, and we'll hit it up. I got some more beats for you guys. I'm going to start putting music back in my my pre-recorded videos as well, and Dim will be a big part of that. So feeling pretty good about where we're headed, where the channel's headed. And by the way, let me just bring it back here. Tomorrow, there'll be a video coming out on portfolio reviews from the crew. So we got a lot of level 2 crew folks in here. If you guys are interested in getting your portfolio reviewed, I'm not a financial advisor, but it's always fun just to kind of poke around and see how, everybody's doing and how everybody invests. So I'm going to do some portfolio reviews, maybe roast a few, all in good fun, give my thoughts and opinions on it. And if you guys are interested in that, it's only for exclusively the level 2 crew and up. So if you guys go check out the join button next to subscribe, join level 2, or go to ownthechaos.com. You guys can get your portfolios reviewed as well. Would love to have you guys submit yours so we can cover them. I think it's going to be fun. I think it's going to be a good series that I actually have on the channel. So I'm pumped for it. We did a little bit of a dry run for our level 2 live stream that we do on Thursday evenings. So, yeah, I'm really excited about it. Okay, so get back to the drawing board here. We got earnings that are coming up for Adobe. It's 4 o'clock. The market is closed. Just to give you an idea of how we closed on the day, S&P closed at 45.11, just off of the high of the day. Same thing with the Dow. Everything kind of sold off right at the end of the day. Dow's up 0.75%. NASDAQ's up 2%. Just an unbelievable day. And the Russell 2000 even closed up over 1%. Really, really awesome day today. I hope it continues. Again, like I said, I hope it actually kind of levels off a little bit. Not really looking for something to just go straight up, because in all likelihood, if something like that happens, it kind of just comes straight back down. So I'm kind of hoping that doesn't happen. Yeah, Don, same here. I'm getting some fake accounts on my Instagram as well. It's not me either. If you get messages from Don or myself that has anything to do with crypto, chances are it's not us. Okay. Jeff Chocolate. What's up, man? What's up, Jeff? Says, what are your thoughts on Cleveland Cliffs as we're awaiting the earnings numbers? It looks like we're kind of, we'll see. What are your thoughts on Cleveland Cliffs potential continuation of this upward trend? Yes, let's just touch on Cleveland Cliffs real quick, because this was another Chaos Crew watch list item. It actually broke to all-time, was it, no, I'm sorry, 52-week highs right out the gate today, and it is at the top of this ascending channel. So the materials plays, the commodities have been on absolute fire, which is why Cleveland Cliffs has done so well. Since February 24th, we've seen 2 red days out of Cleveland Cliffs. Two red days. Monster move from the bottom of this channel to the top. So one of two things is going to happen. Either this is going to break out, which I think is very likely just considering the environment that we're in right now, or it corrects back down. RSI is very hot. And we've seen that every time it kind of gets to this level, it does sell off a little bit. So I think there is a chance that could happen, but just be careful with this one. I do think there's a possibility that it could break out. If you're not in Cleveland Cliffs and you want to be in, if you just take a position on here, maybe it's a starter, leave yourself a stop for the just in case. I think that's the appropriate way to go with that one. But I do think it does go higher, even though it is a bit overheated. Check back in with Adobe to see if there's any kind of price action on this one. Not really a whole lot just yet, but I'll go ahead and pull it up, see if those numbers start to come in. By the way, I'm thinking this is the way the channel is kind of going. We're obviously I cover a lot of stuff in pre-recorded videos. I just put one out on Shopify last night. Hope you guys enjoyed that one. But I think the live streams are going to be mostly dedicated to these earnings calls, just kind of giving our reaction, and certainly let me know your guys' feedback on this, because I always like to reach out to you guys and let you know what I'm up to. But this is where I think that I live in the YouTube space. You guys seem to really love it. The reactions are great, and obviously it gets a little slow in between earnings season and that sort of thing. But I think this is kind of where I live on YouTube, is just giving earnings reactions during live streams, and then kind of doing my own thing when I do pre-recorded stuff like that. Obviously having guests on will certainly continue to be a thing. So got a lot in the works. I just have a lot of ideas brewing in my brain. So let me know what you guys think in the comments, or reach out to me at Own the Chaos on Twitter, or anywhere else you can find me on social media. I'd love to get your guys' thoughts on that. Because really, I haven't seen anybody else that just specifically gives their reactions to earnings in general. I think this is definitely a niche within the niche that I could continue to do. Right now, Adobe, though, getting back to the stock of the day, is up about 0.5%. Don't have those numbers out just yet. Just to give you guys a little bit of a refresher, the expected earnings per share at $3.34. Average estimates at $4.24 billion in revenue. We'll see where that goes. Ooh, okay, interesting. Snooker says, we're really like to see your dailies be a lot longer than they are currently. I'm usually on about an hour, 45 minutes to an hour. How much longer would you like me to be on? I feel like sometimes I run out of things to talk about. But that's certainly, something to consider. I'm not opposed to it. I won't say no. Jay Valdez says your calm demeanor helps us feel less depressed when we get killed. Speaking of getting killed, Adobe is down right now, 4.5%. So my feel good nature about Adobe right now doesn't look like it's playing out so far. I did see somebody in the chat say they had puts on Adobe going into the earnings, so hopefully they're making out. It is early it's early yet though. Let's see here. So earnings report is in. Adobe achieved record revenue of $4.26 billion. As I'd mentioned before, the expectation was $4.24 billion. So it looks like they beat on revenue. Again, they came in at $4.26 billion for the first quarter of the fiscal year of 2022. Looking at earnings per share to see where we're at. Right now, the stock is down around 2.5%. So it's kind of recovering from that initial drop off. Let's see here. Looks like they came in at $2. Is that right? $2.66. Wow, that's going to be a big miss if those are the actual numbers. Waiting to see if I can find something to cross-reference that. Give me one moment as I'm sifting through here. If that sticks, says Don. Congrats on the puts. Yeah, for sure. Here we go. Our earnings per share. So that was the wrong number. Earnings per share, they came in at $3.37, beating the $3.34 estimate. Again, sales were at, or revenue was at $4.26 billion. They beat the $4.2 billion estimate. So they didn't smash earnings, but they beat them nevertheless. I think this is a good earnings call. We'll see what their outlook looks like. As we always know, and as you guys know, especially those of you who've been watching for a while, earnings, just because the stock beats earnings or a company beats earnings per share and beats on revenue doesn't tell you the whole story, because that is the quarter before. Investors want to know what to look out for in the quarter ahead, or maybe even the quarter that they're currently in. And so sometimes, most of the time, companies will shed some light on what they're expecting for the quarter and the year ahead. So if that is less than what expectations were, then that could be some of the reason for the selling. Right now, the stock is down around 3%. This is why we always say going in the earnings, it's kind of a crapshoot, kind of gambling with some money if you're going in on it just to play earnings. Because a company that beats expectations doesn't always mean green arrows. We got CP Siphon. Says they have Adobe puts. Congrats on that. Yeah, there's no way I can do an entire day on live stream anymore. Whew, that was exhausting. That was mentally exhausting. That Tesla battery day. Whew, man, that was rough. So if you guys are just tuning in, Adobe came in. They beat on earnings per share. They came in at $3.37. Compared to the estimate of $3.34, they came in with revenue at $4.26 billion. They beat the estimates there at $4.24 billion. So $200 million beat on revenue. They beat earnings per share by 3 cents. So didn't really knock it out of the park by any stretch of the imagination, but a good quarter nevertheless. I think what could be taking place here is that investors are looking at this as a potential slowdown in growth. But like I said earlier, it's growth nevertheless. I think it's just people are expecting, these blowout numbers that we saw back in 21, and that's just not going to happen. The expectations there are just way too high still, and I guess it looks like as if maybe that's still going to be the case for some time. Who was here for Battery Day? Where my OG's at, says Jeff Chow. Yeah, man. Battery Day was a 6-hour affair, and it was exhausting. It was exhausting. Oh my goodness. Yeah, RSI on the 5-minute chart right now, Jeff Bonica, is actually at 18. But again, RSI is never the end all be all, right? Relative strength is just an indicator. Doesn't mean a whole lot other than, just how much is it selling off or how much is it ripping up. There's other factors here, but it is approaching oversold levels. And I think if we look at the chart here, so 444 is where it's trading at right now. It's down around 4.5%. The bottom here is right around 407.94. That was the big bottom down here on March 14th. So about a week and a half ago. And I don't know if I see it retesting that. I think this could be a temporary move down. We'll see. I still don't have any numbers on or outlook yet for Adobe. If I get something on that, I can certainly share that with you guys. Here we go. That's okay. So the outlook was a little bit. No, the outlook was better. Adjusted earnings per share 330 sees the second quarter earnings per share. Oh, well, yeah. It sees the second quarter 244. So next quarter is actually significantly lower. So the next quarter's expectations was $3.35. So that there you have it. That's why it's selling off. They see their second quarter earnings per share at $2.44, while everybody else was expecting a $3.35. So the slowdown is for sure happening. Let's go back to the 5-minute chart just to kind of give you a snapshot of what's going on here. So they're talking about a slowing of growth. $2.44, pretty significant drop off from $3.35 was the expectation for next quarter. So they did lower their guidance a little bit. Snookeroo was here during Battery Day. Yeah. Tesla's been doing amazing today. Really nice move. Just shy of $1,000. Right now, it's starting to look like it might move back a little bit more. So, guys, if you just are just tuning in, I see some people rolling into the stream. We got 150 of you guys live with me. I appreciate you allowing me to be a part of your afternoon. Hit the like button if you're enjoying the stream so far. But if you are just coming in, Adobe came in and beat earnings per share. The expected earnings per share is $3.34. They came in at $3.37. The revenue expectations were 4.24 billion. They came in at 4.26 billion. They beat on earnings per share and they beat on revenue. But then they came out with guidance and they see their second quarter earnings per share of $2.44, whereas the expectation, and this is according to Yahoo Finance, was at $3.35. So pretty decent drop off on earnings per share. I still think this is probably a little bit of an overreaction. And to me, it kind of feels like, let me know what you guys think. It kind of feels like Adobe's lowballing here. And we've seen this time and again from a lot of these tech stocks, especially recently, on just kind of lowballing it. And we saw that from Apple, and then Apple continued to move up. Apple didn't give us a great outlook, and then it continued to get, to run up after earnings. All the other numbers, though, look great. This may be an opportunity for Adobe to get bought up. We'll see. It's early yet. We're only 10 minutes into the release of their earnings. Rui says until the end, Adobe will rise. Yeah, we'll see. So far, the stock's starting to fight its way back. It's now only down around 3%. Earlier, it was down over 5%. And really starting to make the move here. So it was down as low as 441. And starting to get bought back up. There's so many things that can change the tune here. One of them could be that Adobe comes in their conference call. They put something in there. Maybe they announce a buyback of some sort. And we've seen that. We've seen that before in many stocks previously. So, if you guys are long on Adobe, I don't want you guys to get too discouraged here, because it doesn't mean that there's a nail in the coffin of Adobe. But the expectations for next quarter definitely were lower than what the street was expecting. So that's why the stock's selling off. And that's why sometimes, even though they come in and beat earnings and beat revenue, that the stock, goes down. Doesn't always mean that we see a huge jump in price just because they beat earnings from last quarter. Everything matters about the quarters ahead. Yes, yeah, for sure. Jay Valdez says, yeah, don't jump out the window. Yeah, don't do that on Adobe. As I mentioned before, and I talked about this. I was reading off the Barron's article on Adobe talking about digital marketing. Their digital marketing is unbelievable, and that's what's really going to benefit Adobe moving forward. They're expecting $1 trillion in online sales across the board, and so I think that is an incredible number. Online grocery shopping alone grew 103% from 2020 to 2021, and they're expecting it to be even more this year. So I think, as painful as it is right now to see Adobe where it's at, and given how much it's come down, I still think there's some good opportunity here. It may be a little bit treacherous though, just because you have price to sales that's around 14 times, and you have the forward PE sitting around 33, which the forward PE is kind of in line, as I'd mentioned earlier, with some of the other tech stocks. So that's not really like crazy numbers. The price to sales is a little high, but it's not, again, anything wild. I would say this is probably going to present itself with a good opportunity. I would be very surprised if it actually came back down and tested down here around the lows that we saw back in March 14th. I'd be very surprised by that. So the expectation here for me, I think, is probably for it to settle out around 443 if we don't get any kind of like really good outlook or really good comments from their conference call. So I would say that maybe that's where it settles out, around 443, 445, that area there. And then maybe that presents itself with an opportunity for you guys to scoop up some Adobe. Now they come in and talk about outlook and how they see some really great growth, or they come in and talk about buybacks. They start buying stock back. The stock could move up considerably. So keep that in mind. But I really like this. I really like this quarter that they reported on. The outlook is just a little bit lower than what expectations were. All right, getting to some other comments here. Poshmark is getting destroyed. Yeah, Poshmark had earnings today too. We can cover Poshmark. I wasn't quite sure if anybody was actually interested in Poshmark. I knew it was kind of a popular one during the Wall Street Bets days. But yeah, this is also getting hammered. It's down 8% after hours. And look at this is the daily chart. All right. It's literally done nothing but go down since IPO. We got 1, 2, 3, 4, 5. This is the 6th quarter that they're reporting on. So 18 months in for Poshmark. Stock's done nothing but go down ever since the day one of going public. I don't know why people are so excited about it when that's all it's done is go down, which is kind of one of the reasons why I wasn't planning on covering it. But since somebody is mentioning it, yeah, down 9.5%. Let's take a look, see if I can find some of those numbers. To me, this does not look like a good opportunity at all. So, well, this is why it's been doing so poorly. They came in and missed earnings per share, a loss of 19 cents compared to a loss of 18 cents that was estimated. Sales came in at $84 million. They beat revenue estimates that were at 80 and a half. So they came at $84.2 million. They beat the estimate of $80.59 million. But they missed on earnings per share, a loss of 19 cents, and they missed the loss of 18-cent estimate. Here's that, and this is kind of proof in the pudding, right? We've talked about this. Stocks that don't do well in a rising rate environment, and when inflation goes up, stocks that don't report, for a profit, they're going to continue to suffer. So really, Posh was one of those companies that just went public at the worst possible time. When you think about it, right? I mean, when we started to really see true inflation numbers, this was January 21, things really started to heat up as far as inflation was concerned. Then we have the Fed coming in this year talking about raising rates. And for a company like Poshmark that comes in and reports consistent losses, they're just going to continue to get hammered until they can finally turn a profit. And the growth story here is going to continue to slow down because now it's going to cost them more to borrow to grow, and that's not good for companies like these. It's just not. They're not going to do well. They're not going to thrive in an environment like this. So that's why Poshmark is selling off, unfortunately. Stock's now down 6.8%, which I guess is a little bit better from where it was down here at 12.25 after closing the day at 13.83. Checking back in with Adobe. Let's see where we're at. Starting to make a turnaround here. Surprise, surprise. Curious as to why this is turning around, but it was down around 6% after hours, and now is making a really decent move back up, trying to go green. Really decent move here. If you guys are just tuning in, again, it came in and beat earnings per share, $3.37 compared to the $3.34. Came in and beat revenue as well, $4.26 billion compared to the $4.2 billion that was expected. And the outlook came in a little bit light. It was a little bit lighter than what was expected from the street, and that's why it initially sold off. We can speculate that's why it initially sold off. But now it's starting to fit its way back. Wonder if there's something in those in the report that maybe investors are digesting here. We'll see. Again, this after hours action is always kind of tricky. Let's see here. Just looking to see if there's any kind of other sentiment here from those earnings. I'm not seeing anything that's jumping out at me on the report, but yeah, we'll see if it continues to move up from here. But those are your Adobe earnings. Turcobi, thanks for the donate. Appreciate you. Says, is 10-cent reporting earnings tomorrow or not? I thought they were. Let me confirm that for you. Let's see. Tomorrow is Wednesday. 10-cent is reporting earnings tomorrow pre-market. Correct. Yes. Confirmed. That is according to Earnings Whispers. Just an FYI. That's where I got that information from. All right. What else you guys got your eye on? So just to kind of give a overall, what are we looking at for the overall market? I think it's all systems go right now. Could we see some pain later in the year, especially as interest rates continue to go up? Yes. But as we're seeing right now, I mean, the big black cloud that's hanging over everybody's head is the Russia-Ukraine situation and how that's impacting commodities in particular, with wheat, fertilizer. It was interesting. One of the major fertilizer producers just bought an F1 team last year, if you guys recall, and that's been a whole debacle as Formula One has really kind of taken it to Haas, and Haas separated themselves from that particular sponsor. And I thought that whole story was fascinating. But fertilizer has been one of the big key topics as far as sanctions on Russia and the rest of the world not having to do with anything that Russia provides. And so we're going to continue to see inflation go up on goods in that regard, I think. However, the overall economy, especially in the U.S., is still strong. I mean, we saw some really good numbers from Nike, and Nike was able to overcome a lot from an inflationary standpoint, as well as rising wages. And we saw how well they did yesterday on those earnings reports and gave a great outlook as well. The U.S. consumer is still very strong. And I don't think that there's any reason to necessarily be too afraid at this point. There's a huge wall of worry. We haven't seen consumer sentiment this low since the great financial crisis back in 2008. I think people are just too worried at this point. Is there cause for concern? Absolutely. Is there too much cause for concern right now? Yes, I think so. And I think that's why we're seeing some rallies. Danny Alvarado, thanks for the donate, man. Appreciate you. Says, do you think Amazon will hit all-time highs after the split in May? I think they'll hit all-time highs regardless. A lot of people get themselves wrapped around stock splits and how the stock reacts off of stock splits. And to be honest with you, historically, stocks don't usually do all that well or don't move hardly at all after splits. We saw Nvidia go crazy after it split, right? But it wasn't because the stock split at all. It was just because of how well the company was doing. But here's Amazon, It touched 3,300 today. Several areas of resistance, with one of which it hit today at the 200-day moving average, which is around. Let me zoom in here. See if I can zoom in. I can't get it. We'll say 33.25 is around where the 200-day moving average is right now. So I think, just as I was talking to you guys about how e-commerce has been doing and the amount of online spending that's taking place, and how we could see major moves in this in the coming years in the very short term, I think Amazon still is undervalued. And it's not just with the e-commerce side, right? AWS, the cloud space, is going to continue to rip and roar. We're seeing that across the board, especially as more and more companies are concerned with cybersecurity and things living on the cloud. That's where AWS is going to come in handy. And we've talked about Microsoft as well being a good wartime stock. And that's because of their exposure to cybersecurity. The Azure side of their business is doing extraordinarily well. So I think that this is what's really going to carry Amazon, not so much the split itself. Is it going to mean that it's going to be more affordable for retail investors to buy up some Amazon? Yeah, and maybe that gives you a little bit more bullish sentiment. But at the end of the day, nothing changes with Amazon fundamentally when the split goes through. And that goes for Google as well. So Alphabet's doing a split in July. I believe Amazon's is supposed to go through in June. So there's going to be two big companies that are going to have stocks that look more affordable, but in reality, the fundamentals say that they're just the same. Amazon also just bought MGM Productions, says Jeff Chow. Yes, they did. Savvy Money Show says Alphabet's up today. Yeah, so Alphabet, and we talked about this, I think, earlier in the week, or maybe it was earlier last week. But this chart is phenomenal right now. Very clear bottom support that held and now is ripping, closed above the 200-day moving average. The momentum here for a lot of these stocks that have been beaten down is extraordinary. And it's the growth stocks that are quality growth stocks. And you guys have heard me talk about this on this channel at length for quite some time over the last 6 to 8 months about just being in good quality companies and weathering the storm. I think that this is where it's finally going to pay off. I mean, you look at something like Alphabet right now, price to sales is at 8. The forward PE is at, what did I say? 23, 24. So still well below Microsoft or a Apple. I mean, and even Meta is starting to make a comeback here. Facebook had a really great day today. It's up 2.5% from its 185 lows, now sitting at 216. I think we saw it at 217 at one point today. So this is also coming back around. But look how cheap this is too. Price to sales is at 5.25. Forward PE is at 17. That is a joke. That is an absolute joke for Meta Platforms. For a company that brings in $40 billion in free cash flow a year, for it to be trading down here is insane. I think that this is ridiculously cheap too. So the tech stocks, the growth stocks that are reporting profits are still going to do well. And these are the ones that I'd rather buy over anything that doesn't make any money. I mean, Posh was a good example of that today, right? Company that, yeah, they missed earnings, but they're going to get punished even more because they're not profitable. So that it just kind of exacerbates things. But, and I haven't looked at Salesforce either. Salesforce is one that's definitely on my radar. Yeah, look at this bounce back. Salesforce is looking strong too. Really, another good solid tech company, another good solid growth company that has extraordinary growth behind it, and they are profitable. What a monster that this will become. Sitting at 218 is where it closed at today. It closed above the 50-day moving average. This is another one that's going to do very well for itself, I think. Ghost Knight says everything's so cheap right now. Yeah. Yeah, isn't that the truth, man? Sure feels that way. All right. So that's going to wrap up today's stream. I appreciate you guys hanging out. It is imperative that you take a look at that join button, because if you missed out on some of the moves today, especially with CrowdStrike, Cleveland Cliffs, and many others, you might have missed out on that because you were not a part of the Chaos Crew. So hit the join button next to the Chaos Crew for $4.99 a month. That's all it costs you. You get to watch this for me every single day. I put up 5 stocks with a fundamental breakdown as well as technical analysis. You get access to our Discord group. I've just started doing portfolio reviews for our Chaos Crew just to have some fun with it. And it's just a great community to be a part of. So if you're not a part of that, make sure that you hit that join button next to subscribe. If the join button isn't available to you, you can always go to ownthechaos.com. The link is in the description there as well. It's not a lot for you. It doesn't impact your wallet all that much, but it does wonders for me. It helps support the channel and everything you see behind you. So I certainly would appreciate it. And thanks so much for your support and for watching today. That's going to do it for me. I'll be back here tomorrow at 3:45 p.m. Eastern time to go over some more earnings as well. And those will be KB Homes, Trip.com. And you want me to cover Traeger's tomorrow as well. So that'll be interesting. And I guess we'll see what the Fed's going to say about tomorrow as well. So that's going to do it for me today, guys. Thanks so much for tuning in. I'll see you tomorrow. Bye.